The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends. And what do we have out here in the market? Well, it doesn't like the people that are short. I guess we can just say it like that. We've got a market that is up 35 points on the S&P cash, a little over 3 billion shares. I kind of thought that maybe this storm would hit a little bit sooner and we'd have a little lighter volume out here. Now, of course, we're at 1904 and change on the S&P cash. We hit a high earlier at 1906.90. I've been watching the last couple minutes. Maybe we've bounced off of it or not, but pretty much at the highs of the days. And, of course, we had a lot of people buying downside protection over the last week. The VIX showed us that. And, of course, what happens on Fridays like today, especially with puts, you just see those premiums melt into the close. I think we could probably be making a temporary high. I'm looking forward to next week when we get the FOMC meeting. It's a 2-day meeting. And I think we're probably going to be in a holding pattern. And we're going to talk about that holding pattern first for the FOMC meeting and then probably for earnings. Of course, we've got Apple next week. We've got spineless weasels telling everybody why they should buy Apple today. And we'll get into that and look at how well it's done. A lot of stuff going on out here that really makes it look as if we're back to the old fun and games of a bear market. That is, of course, the first leg down comes down. Everybody moves without really talking about it, moves their guidance down. The stocks bounce back up. Everybody tells everybody how they beat guidance, and they don't tell them how the last 4 quarters guidance has been moved down every time. They just say, well, they beat what? They beat a limbo bar that keeps going up instead of keeps going down. And, what else can you say about that? Well, anyway, I guess it's time to get this party started.
The following takes place between 2 p.m. and 3 p.m.
Every day, folks, every day. And this is one of these days where I really couldn't find anything in history I wanted to talk about, so we're going to just skip it. I was going to talk about Ted Kaczynski, the Unabomber. I was going to try to talk about some things in the stock market. But you know what? There's nothing, just plain nothing that I wanted to talk about today. So we're just going to move on and start getting right into some charts. What do we have going on today? And, of course, this is the counter move. Most people probably, if I would have told them on Wednesday that we would have been back over 1,900 on the S&P cash, they would have said, you were nuts, Dave. I've been looking for a move back into the 1950, maybe 1975 area on the S&P. I don't know if we're going to get that. I really hate that we moved up here so fast. Normally, I put it in my newsletter, it is a tale of Goldilocks, where you have the 3 bears, and the one's too hot, and the one's too cold, and the other one's just right. This just seemed to me like it was a little too hot. So I think probably we are going to see that pull back into the FOMC meeting, start maybe another little ABC back up, and then maybe we get up to that 1950 level on the S&P cash. It may take a while. We may even go sideways for a lot longer than you can remain patient and sit on your hands. But I'll be looking at those confluence levels we showed earlier this week, and know that if I'm going to have a good trade, I'm going to have to be extremely patient out here. As we get started today, let's look at Apple, because we had the proverbial weasel of Wall Street, Herman Munster. I forget what his real first name is. Munster. He's always out telling everybody how he's a great prognosticator of stock prices, especially for Apple. So he put out a note today, and I think the note should just be, we're going to have a short squeeze today. I think all his other babbling about how when Apple was at its high, it was only going to go higher. Once it hit 100, he said it was only going to go lower. Now he's telling everybody that Apple will be $150 by the end of the year. I don't know. Maybe he's got insider information that no one else has, which I doubt. I don't think Apple has told him anything. What I do know, of course, is that a whole lot hasn't changed. It has been this week, actually, or last week, marks the 1-year anniversary of them rolling out the iWatch, and nothing has actually changed. It hasn't been a big seller for them. Most of them ended up in drawers next to people's bed. It had one critical flaw, and if you read books on technology and technology marketing, there's always the thing called the killer app. Computers got started because there were tons and tons, or the personal computer got started because there were tons and tons of MBAs coming out about 1980 out of our colleges, and they all wanted to play with this new thing called a spreadsheet. They could sit there and play with it infinitum and do all kinds of stuff, and it really, if you were in that kind of work, made things incredibly easy comparatively to what they were before. You could change one number and everything in the spreadsheet would change. How easy is that? And of course, Apple IIs kind of were the first bastion of that product. A product called VisiCalc came out, and that was the killer app for Apple. Of course, for the PC, it was all the different word processing programs, spreadsheets. You probably have to say Windows was built on Office and all those products that went along with it. But there's always this killer app. There was an absolute reason to buy it by at least a core amount of folks. There was never a killer app with the iWatch. And the killer app is everything. Everybody knew what it was going to be before the watch came out. It was supposed to be the way to actually see and get your notifications, just the ones you want. And I have to just, on my phone, where's my phone? It's in my pocket. I have to turn notifications off all the time because these things are, everybody wants to bug you. If you put an app on your phone, they want to bug you and prod you and sell you stuff. So they're always out there putting notifications on. With Apple, they were supposed to have sold and solved that problem. Here a year longer, it still hasn't been solved. And the idea was that this was going to be the interface to just let you know for the things that you really needed to take care of. It never did happen. We're going to talk more about the weasel Herman Munster, who lives on 1313 Mockingbird Lane, for people that get that inside reference. We'll be back and talk about probably why he is wrong. Anyway, be back in a minute. 1908.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And I just wanted to, I hope we're back. I can't hear myself for some reason. I'm not sure why. Am I here? Yeah, I guess I am. Just got a lot of noise in the background. I'm not exactly sure why. Anyway, we've got, let's turn that down. Maybe that'll help. We were talking about Apple when we were so rudely interrupted. It never came back and tested the 9148, first of all, so we can assume that maybe that's still hanging out there. But you know, when pressed on CNBC today, Mr. Herman Munster from Piper Jaffray came up with a variety of lame and weak ideas. I'm not thinking Apple goes broke anytime soon, or people don't buy their phones anymore. We've just reached kind of the equivalent of peak cell phone, and just like peak oil. Except I think they got peak oil the wrong way around, didn't they? It was the peak price for oil, not the peak amount of it. Now we are literally swimming in a sea of unwanted oil, and that is the problem. Eventually, any big company reaches the law of diminishing returns, and at the point that you get to a stock that hits its all-time high at $131.93, comes the time for the big men of the street to push their wares off on other folks. And could this go sideways like Microsoft did for 10 years or even longer, 12 years, 15 years? You know, it's not impossible. I mean, we saw Walmart do it, other big companies. The problem is that they had 4 new products last year. All of them were not just kind of failures. They were huge failures, or as Donald Trump would say, huge failures. And I just don't know. If he knows that they have set another product that would really change things, that would be very interesting. But my thought is they probably don't. I think we saw a great deal what we saw last year. This also fits in to what I've been talking about, I think, since I came to TFNN, and that is you never want, at least the track record for CFOs who become CEOs is horrifically bad. The poster child for that, of course, is the gentleman that ran at Microsoft after he took off, after he was handed the reins, shall we say, from Bill Gates. And the guy never did one thing right. He bought Skype for $8.5 billion. He could have done it himself for maybe $500 or $600 million. Very tough to see why these people do such stupid things. Probably the smartest thing that happened was the Yahoo deal blew up in his face for Ballmer, and he wasn't able to throw 20 million at or 20 billion at Yahoo. We can see how that would have turned out. The only thing that the current CEO hasn't done is do some kind of really stupid, really insane buyout. And my guess is I think that's coming. But do they have a future? The answer is yes. They've got a huge cadre of people that are true believers. They'll buy Apple forever. The question is, do they ever find another market that has 69% margins and something that they can sell 100 million of them in a 6-month or a 1-year period? I guess if you're, everybody calls it the Orson Welles effect. If you make Citizen Kane, where do you go from there? Many people in movies think that that's the greatest movie ever made. Do you ever beat that? And what happens to you after it when you peak far too early? And I think that is part of the problem. There aren't a lot of new ideas going around Apple. Everybody's trying to get into cars. Cars have typically horrible margins. And what else can you think? If anybody comes up with a great idea, you can call me at 877-927-6648. But I fail to find anywhere where Apple is going to be and have a product that has those kind of margins and has that kind of impact. There just aren't a lot of them out there, and you're not going to make a Citizen Kane every year, no matter how many great people you have in a single room. And of course, lastly, I suspect that part of the banter on CNBC to push Apple higher today has a lot to do with people trying to get out of positions. The easiest thing to do is move Apple up. People have to buy the indexes, and it gives you an easy way out of a market that you think is going down. So can Apple go higher? Certainly can. They can, kind of like kids, you can dangle the keys in front of them. Look at the shiny Apple. Oh, Apple is going up. And this is the kind of feedback loop that starts these kind of tech bear markets. But if we just look at the chart, especially my power law vector indicator out here, we'll zoom into that just a little bit. This thing had some fairly significant energy on the way down. If we just look on the major low from August 24th to the major high November 4th and back to this low, which was in a buck or two, energy was about 20% higher on this last leg down. It is rare that you don't get a bounce and a retest of those lows anytime you have that much energy come into a stock on the way down. So does it absolutely have to happen? The answer is no. But in my experience, when you get big stocks like this and you see the big selling come in, you're going to get a bounce. You're probably going to get a 50% bounce, something maybe 107, maybe 110 as much. And then you're going to see that all the people that were telling you the stock was going up were selling. And even the people that kind of put together what was supposed to be the wall of China between analysts and the buy side and sell side people of their organization. I suspect that is nothing more than tissue paper these days. I'm sure they go to the bathroom and harump. They talk to each other, and the only place that isn't bugged anymore in their entire businesses because of past indiscretion of many other people that said one thing and did another. We can see it. But anyway, if we just look at a standard retracement in Apple, and we look at it, this last one, 108.36 is a 50% retracement. 111.89 is. But I didn't talk about it last Friday. But a lot of people already yelling and screaming for the head of Tim Cook, that he must go. Normally, it takes about a year before those drumbeats become the peasants out with their pitchforks demanding someone must go. Anyway, I think the worm has turned, but look for the numbers to be talking about more earnings coming next week.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And it looks like we went to 1908 on the S&P cash. We're back to let's call it 1904. 3.3 billion shares. So volume is still good, but I think we're probably probably got just about everything that we could have off the bottom from Wednesday when we bought. And we'll look forward to waiting now to short the next leg down. Other stocks of interest out here are Amgen. Of course, it'll be out Monday morning. Here's my list. We're going to take a look at it. Just narrowing range. You could say this is a long-term triangle too, so not really giving us a lot of clues. The IBB didn't show me much today. What is that? 287.16 got to 289, so it's up $8, but about 3%. But man, that thing certainly looks stuck. Maybe earnings will get it out of it. You've got two gaps, light volume out here today. I don't think you can make a call from the chart out here at all for Amgen, other than the fact that if you are in the IBB, know that you're probably going to see a lot of action come Monday morning. Other stocks of interest with earnings next Monday morning. What do we got out here? There was one else here on my list. There are a bunch of them. One of the ones I like watching and not predicting, KAG, is that it? Is Packaging Corporation of America. One of the reasons I like this particular stock is that it will give you generally about a 6-week head start on the rest of the market, as if you're a dog food company and you're selling a lot more dog food, well, you got to order all the packaging for it. If you do anything that's in retail, you got to basically go out and do the packaging for it. So, we've got a pretty nice test in Packaging Corporation of America. This is out Monday morning. October 15th, $55.01, 3.1 million share. Got to $54 on a spike on January 20th. A little bit higher out here, but not giving us the all clear. I disliked all the energy down, of course, and normally you don't have just a V bottom on these kind. You do have light volume out here, so if we're probably going to see a revival in retail, you're probably going to start seeing it in companies like this that have to do with packaging, and other companies that make wood pulp for cardboard boxes. There's a lot of this kind of canary in the coal mine happening, but they'll also be out Monday morning. From China, Kuaihu's supposed to be out. I don't know if you can make a lot out of this particular company. Sanmina, I think, will probably have a little bit better read. Oh, did I type it right? S-A-N, S-A-N-M? I guess I did. Maybe I have to add that. S-A? What am I doing? S-A, oh. Dyslexia Cure for found. N-M, not M-N. And Mina, nice little pop out here. And, you had a lighter test of the low, but not light enough for me. I wouldn't be touching this. Again, Monday morning, you had a lot of energy, but actually, if you look at the up and down energy, this first leg from October 13th to November 6th actually was pretty good in 2014. That set up this big trading range, and you did have a high volume high on November 3rd, but if you look at the energy from August 24th up to November 3rd and then down, we had a lot more energy down. So is this all washed out? It could be, but I just don't continue to see a great deal out here that tells us anything more. Tesro, Zion. Oh, that's after the bell. Excuse me. Amgen's after the bell. I think I've been telling everybody it was before the bell. Before the bell, we have D.H. Horton. Let's take a quick look at them. And that is before the bell. I've confused myself. A nice little pop out here. Not much volume. Good energy on the way down. You have a gap. That's probably going to be pretty decent resistance. So if you have good news, 29.5, if not 25.41. We also have Halliburton. I think we looked at that the other day, in that it had a fairly decent test of its low, but the volume just was too much. August 24th, 24 million shares, $30.75. We basically spiked that, $27.64 on the 20th. We've had a couple of days up here, even with the good energy data. We're just back kind of in the trading range. But watch them first thing in the morning. Do we have anything else? Not it. Let's take a look at the next day and get our look into Tuesday. And of course, the Fed announcement is on Tuesday. So on the morning of Tuesday, we've got Coach coming up. Let's take a quick look at that. Man, I wish the charts actually were given a better signal. But man, talk about ambiguous. The one thing you did have was a clear sign of a high in Coach. The previous high of October 27th was $33.08. You had kind of a little an abandoned baby up here on January 5th with 5.5 million shares. So half that October 27th high. So you've been moving back in. So you're limited probably to that $34 range on the high side. And you know what, on the low side, maybe $30. So a lot of these things are not setting up with a lot of range into these things for Tuesday. Johnson & Johnson, another one. Let's take a quick look at it. Well, not much of a bounce out of this one at all. In fact, extremely light volume today out here so far for J&J. Energy was pretty good off the top. I think a lot of people were looking at this as a safety stock, probably getting into it. And it's not that big of a move every day anyway. But what would you have on that? You got 3 gaps down. So, you know, possibly if it had good news, you'd look for 102 in this one. It could still go to 102 and then head back down, still in a bear market. What else do we have? Lockheed Martin, and not a lot of mystery in that one. Polaris Industries, I think that one blew up last quarter on earnings. And yeah, this thing's been doing nothing but auguring straight back in. Not much of a bounce off of it. This thing was 155.82 July 15th and has done nothing but go straight down with periodic week-long range where it almost went up higher than the last gap down. No real sign of a bottom in this. The only thing I can think of is that a lot of the loans on the stuff that they sold are getting a lot harder to get. And a lot of people are not wanting to get into it. After the bell on Tuesday, of course, we have Apple, which we talked about. We've got AT&T, Capital One. We'll take a look at that one when we come back. That's probably going to be a little bit of market moving depending on what they got going on out there. And what else? Hawaiian Holdings. I don't know. We'll talk more about these when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We got Robert from Chicago on. How you doing, Robert?
Oh, hey, David. How are you?
Pretty good. You want to look at...
Yeah, I think I heard you mention Tuesday J&J and Proctor's on Tuesday. Yeah.
Did I say that?
No, you didn't. You didn't mention Proctor. I was going to ask you about Proctor.
Okay, let me find my. Here it is, right here. Okay, earnings calendars. U.S. earnings calendar. Symbol PG is January 26th.
Whoa, yeah.
So where are we at? On Tuesday, yeah. So maybe I did say it. I can't remember now. I'm losing my mind. So are you in this stock now?
No, just wondering. Oh, yeah, I do have a position. But I'm just curious what your thoughts are. I could, I don't really have an opinion.
Do you work for this company?
No.
Okay. I know them rather intimately because of them, I was never able to upgrade out of the 8 years I lived in Cincinnati because everybody had 5 billion miles, and Delta treated me like crap with my 2 million miles on them.
Right.
So I was always a little ticked off at Procter & Gamble. They have 2 big buildings right as you cross downtown in Cincinnati if you ever drive through there on I-75. There are 2 giant domed gold buildings that they call the Dolly Parton buildings, if you get my drift.
Yeah.
Down there. Anyway, I talked to a bunch of people that worked for the company over the years I was on planes because I was always next to somebody that worked from Procter & Gamble. They put their people on the plane Monday morning, and they didn't quit flying until Friday close when I came back. So I knew that if I was going out Sunday night, I probably was going to be on a plane load of Procter & Gamble people. You got to think that any downturn in the market, this is where people are going to turn to for safety. The downside is that all stocks in a bear market tend to kind of go down. They just less in this one. Are their earnings probably going to be good? Yes. Are more people going to get into them? Yes. You kind of want to be in these stocks, I think, on just the upsides like we've had the last few days, right? I mean, if this is a safety stock for you, are you thinking that you want to be into it for longer?
David, yeah, my view is, when you're a Korean and you walk into a store in Seoul,
Yeah.
and you're going to choose between let's say a product Pantene shampoo, and you're going to look at a Korean-made shampoo, you're going to see a whole lot difference in price, and you're not going to pick the Pantene, the Procter & Gamble product. You're going to look over at the shelf and find a lot cheaper shampoo product made in Korea or somewhere else and buy that. So
yeah,
I'm actually, unless Procter's manufacturing their products overseas, I don't know if they have plants in South America or they have plants over in other countries, but
a lot in Mexico. So you were thinking about shorting it?
Yeah, I don't think the upside is limited. I don't know where it goes. That's my view. I mean, so
the downside to that is these stocks tend to hold up better than just about any other in a downturn market. So my belief is the stock going to go down? Yes. Is it going to go down less than everything else? Yes. So yeah, I think you're right that it's going down. The downside is it's, normally you don't want to get into consumer-ish stocks in a downturn in the market. Most people on Wall Street will run to Procter & Gamble to park their cash, will run to something like tobacco stocks to park their cash, and alcohol stocks. So those are the ones that you tend to avoid being short in a downtrend. Those tend to be the first ones sold once the bear market has kind of gone over. They tend to be highly inflated and be the most expensive stocks in the market. So it's a little counter-trendy to really think about it. But in past bear markets, everybody eventually parks their money in Procter & Gamble to say that they've got some money in the market, right? A lot of these funds have to be 100% invested. And the thing is, they all crowd into these stocks, and it gives lots of room for people that want to get out. But at the same time, it doesn't give you the downside of something where everybody has to get out because the damage is so bad. If you want to look at stocks that tend to get creamed or that have we were short Western Digital. And the only problem I have is I didn't stick with it forever. But, we were shorting this thing when it was back up in about 112. And I think we got out at $70 or something after being short several times on the thing. I thought it was going to get down to about $50, but I thought maybe $50 by the end of the year. When everybody has to get out and these things are getting creamed, these are the stocks especially that you want to be looking at, ones that have already broken but have come back up. This one hasn't come back up. But this is one, if I could ever get this thing back at about $65, I'd be all over it. But normally what you want to look at is the stocks that have had their first leg down and then start hitting them again, right? Once we saw weakness in this one where we were short, I started hitting it again. I think we were short this thing 3 times through this thing. But if you're looking for stocks, you want to find some that already are weak, that have shown the weakness, but everybody still thinks that there's a good story in it. Apple's a good example of that. Everybody wants to get back into Apple, right? So you'll see that really have a big retrace and have a lot of meat on the bone for the next ABC down. Right. So to me, I want to find stocks that everybody's on CNBC telling everybody they're going to go back up to the moon. We're going to go back up there. If they come up there on light volume, if they get to my confluence levels, that's where I really want to start pulling the trigger on them. And we sold our long position today in the daily newsletter, and I'm going to see what happens in the next week. I tell you, between the FOMC meeting, a lot of earnings, I'm fairly unsure about what's going to happen other than a lot of up and down action. I think once we get through next week, we're probably going to really start moving back up. I'd like to see that 1950 level. And that's where I'm really going to focus in on the stocks that have been the weakest on this leg back up, right? And we're probably not going to know that till then. And that's another thing is that if you look now, I can look where the confluence levels are, but I can't tell you that the stocks are going to go back up there on light volume. That's the next thing I'm looking at. So I know where these levels are. I know confluence levels on these stocks. That's where I'm going to be kind of homing in on. But I want to try to find the stocks that went up there on very light volume. Ideally, I see some kind of blow-off top. And that blow-off top will come when the shorts give up. And you'll get a nice little real huge one-day pop in there. Like, let's say it's a stock that normally moves 50, 75 cents a day, and you get a $2 move, and it's on no volume, right? Normally, that is the people behind the curtains running the shorts out at the very end of it, and that's where you have to act. And the window isn't wide. You've got to kind of jump on them right then, but you've got to be watching them as they come up there. But that's what you're looking for. A lot of volume, a lot of price action, very little volume, and kind of maybe twice the regular average range of the day. Back up there at 50 or 70%.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had a question in the den. I'm not a big bond trader, never have been, probably will never be. I know tech, so I'm probably going to lean on that. For chart reading, though, the question is what's going on out here with DLT? Well, you had a test of the previous high almost, about 1 more million shares than the last high. The energy actually was a little bit more in this last leg up. I think at a minimum you get a retest of the August 24th high before anything else happens. I don't know what else to say about it other than that, but energy is consistently higher to the upside on the TLT. I figured this thing would have rolled over a long time ago. It has not. The chart says it's not a slam dunk, But you got to look at every, other than the first, I talked about it earlier, and that is it's a bear market until I see a leg down with lighter energy. And that's a good example in this right here. September 16th to the October 2nd high, back down to the November 9th low in the TLT. The energy kind of came off about, about 18%. You get another move from the November 9th low to the December 11th high, back to the December 30th low. Energy, once again, on my power law vector indicator number, comes down. Now, you've had that twice. That's telling me that you're probably going to get a good run for the upside on it. And if we even just kind of ignore the lows, which are all about the same price, at worst, you've got some kind of price range in here. You got a high volume high, so it's probably going to get tested. You got all the things to say that I probably wouldn't have been short this if you looked at this chart and I changed the name to anything else. So probably a good test out there is just to put a piece of paper over the name of whatever you're looking at in the chart. But on this one, if I look at it just plainly in the charts, a retest of 128.13 looks to me the most likely thing. Volume is low on the pullback today. I don't know what else you can say. Got a listener, Warren in Denver, Colorado, says he wants to look at EDLP. It's one of the ELPs, MLPs. To tell you the truth, I don't know why you would be in one of these limited partnerships right now. Are you going to get a bounce? Yeah. But how low could it go? Hard to tell. You did kind of make a lower low out here on lighter volume. You're back into the trading range. But again, this last leg down from January 5th to the January 20th low was on more energy. So just like TLT, you're going to have a couple of those things moving around before it would say that it's safe to buy it. I just don't understand buying limited partnerships out here. Most of these things, I said it when all these things were coming out, when crude was 120 and 150 bucks, they know the top is in. I didn't know that crude would go to 40 or 20, but you knew when everybody was pushing these things out left and right that they thought that the top was in, or it was as good as it was going to get. Maybe it'd stay at 150, but they didn't think it was going to go any higher. And they started pushing these things out for, I take it this is a crude one, right? Yeah. An energy one. And I just don't see any reason to be in it. Let me put it that way. There's a lot of other things. In the meantime, you can always, like I said earlier in this week, cover when you can, not when you have to. You have to short when you can, not when you have to. And in the meantime, we'll be here, same bat channel, same bat time on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.